So what we are doing today is I'm going to share my screen with everybody, and I'm just going to ask to make sure everybody can see it. And what we're going to talk about is some pre-filing coming into the filing season, some things to think about before you go ahead and file returns, just before you go ahead and hit that submit button and send it forward. Okay, I'm going to go ahead and share my screen. Okay, can everybody see my screen?
Yes.
Yes.
Okay, perfect. Let me just shift you guys over. Okay, so like I said, we're going to talk about some pre-filing season TAS taxpayers, TAS tax tips. TAS stands for, is abbreviated for the Taxpayer Advocate. And if you see across the bottom of our screen here on the PowerPoint, it'll give you our website, http://taxpayeradvocate.irs.gov. Has a lot of useful updates on there, and goes into a little bit more what we do to assist our taxpayers. Going on pre-filing season tax tips, we want you to stop before filing just yet. Follow some tax tips to avoid common tax errors that delay return processing. Then your tax return is ready to go. So we're going to get started going through some tax tips and things just to be mindful of when you do file. As we go through, if anyone has any questions, please feel free to ask during the process. Be happy to answer any questions I can. The first thing we're going to take a look at is use your year-end income statements. So if you receive wages, you use Form W-2. If you receive another form of income, that usually corresponds with a Form 1099, like if you're self-employed or if you work as a contractor. Some people just kind of guesstimate at the end of the year and are anxious to file their tax returns, so they'll just put something down where they think. Sometimes people use their last pay statements to kind of judge by. And then what happens is when the IRS does come, the employer has until January 31st, you can see on the bottom there, to send the year-end statements to the IRS. Some employers send them just a little bit later. They do have till the 31st, but by the time the IRS goes through computing and inputting that data, the IRS has a verification data. They do a matching process. So what you're reporting on your tax return, they're matching to what your employer has reported to the IRS. So if you're not reporting the correct income, that would be a filter the IRS has set into place that would kick out your return for someone to manually review and could delay release of any expected refund. The IRS integrity and verification operations. So this is kind of what I was just explaining. What is it? The IRS compares income and withholding reported on your tax return to Form W-2 and other information returns. And why? This is to ensure accurate returns are processed, to help identify fraudulent returns before returns are issued. So why is it important to use your year-end income? Because the IRS compares your income that you're reported to what your payers are reporting, whether it's on a W-2 or a 1099. Sometimes, even though your employer does report it, some taxpayers, as soon as filing season opens, they're sending their tax return in. Some employers might not have sent it in yet. So if that information isn't in the IRS's system, then that's going to possibly delay the processing of your tax return. It might kick out in a filter because it's not there to compare those records. Okay, and they do give us an example down here. I just have to move you guys up here on my screen. Here we go. So the example they're giving is you report $300 in federal income tax withheld on your tax return. Your employer reported $30 of federal income tax being withheld, which is listed on your W-2. The difference can cause your refund to be delayed as it doesn't match what was reported to the IRS. So the IRS does not only match up your income, but of course they're matching up the withholding that's being reported. Of course, withholding is a refundable credit, and they want to ensure that the amount that is going out is correct. Okay, so it's important to review your payer information on forms when you do receive them. That's why you can contact them to get correction process started as soon as possible. And if you can get the discrepancy resolved before filing, then your return and any refund will not be delayed when this verification process is done. Kind of like what that is referring to is if you know you made a certain amount from an employer, so you're looking at your year-end pay stub and you know that, okay, this is what they're saying that I made. But when you get your W-2, it's coming up with some odd amount that just doesn't make sense. Or maybe there's no federal withholding being taken on the W-2. It could have been an error on the employer's part. If you go, well, the heck with it, I'm going to go ahead and file because I know I had withholding takeout of my check all year round, and you go ahead and file that, well, the employer on that W-2 information is what's going to the IRS. So there's a difference in what the employer is saying to what you're reporting, and that would kick out in a filter for you to verify, which will then means you need to go to the employer and you're going to have the employer verify their records and possibly issue out a corrected W-2C to verify that that is the amount that was taken, the withholding taken from you yearly. Okay, does anyone have any questions on that? Okay, so the next slide is talking about double check your information is correct for you, your spouse and your dependents. So it's very important to check the names, spellings, taxpayer identification numbers like the social security numbers, or if there's an I-10, which is an individual taxpayer identification number, or an adoption taxpayer identification number, the dates of birth, the address, the bank account information for all accuracy. You always want to make sure that information is correct. As previously mentioned, if any of these informations are incorrect on a payer statement, you need to contact that payer to have it corrected. Note, you must have a valid social security number for all of your dependents before filing, or that may not only delay the processing of your tax return, but in certain instances it can actually disqualify you for certain refundable credits, like the earned income credit, which we'll discuss a little further on. So it's always important when you are filing your return, and I know sometimes if we're inputting our return information by ourselves using TurboTax or whatever way you're going to go ahead and file, sometimes we're typing fast and we're in our head thinking, yep, that's what my social security number is, typing our address, our names, however. But if you always want to go back and double check to make sure that you did type it. Sometimes go back 3 times just to make sure, because one mistake that could hit out in one of their filters, and that can also delay the processing. So it's always important to make sure your information is correct. Check for all credits and deductions for which you might be eligible. So review your tax form instructions to ensure you claim all deductible items and credits for which you're eligible for. A lot of the eligibility requirements for these items often change yearly, and the forms and formulas used to calculate them can be complex to complete. Generally, family-related credits and deductions are the areas we see most errors, and one of the main reasons after income and wage mismatches are mentioned that can cause the process to slow down. So what that actually is coming down to is double check to make sure that you're calculating any eligible credits you'd be entitled to or feel you might be entitled to, that you calculated them correctly. I know when we are preparing our own individual tax returns, there are a lot of, I know at least in the IRS.gov, there's a lot of worksheets you can refer to and instructions. You're going to want to make sure that you're following those just to make sure that you are putting, number one, everything you're entitled to, and number two, you want to try not to delay any processing with that tax return if you put an incorrect amount down. So family-related credits. So this portion, we're going to talk about some credits that possibly family credits in which you might be eligible for. And this is coming right off of the IRS.gov. And if you go to IRS.gov, it gives you so much information and it could be overwhelming. But if you go right on the search key, you can just type in the specific title and it'll take you right to those topics and break it down a little bit easier for you. I'm going to show you what those deductions look like. Let me see if I can click in here for you, and we could talk about some of these credits. So this is the IRS.gov website, and it talks about credits and deductions for individuals, and it'll break down how the credits and deductions work. When you claim federal credits and deductions on your tax return, it could change the amount of tax you owe. Deductions can reduce the amount of the income before you calculate the amount you owe, and credits can reduce some amounts of tax you owe or increase your tax refunds. Okay, so it's important if you are, yes.
Are you on the IRS website right now?
I am. Can you not see it?
Yeah, we just see your presentation, maybe the way you screen shared.
Oh, maybe that's what it is. Okay, let me see how I can get out of here.
Sorry about that.
No, thank you for letting me know. And that is possible. I just took this link and put it in. So, all right, so I'm going to refer, because I have to be honest, and I apologize, ladies and gentlemen, that I don't know how to share that screen after I bring it up.
If you want to stop sharing, then you can share again and just share as your desktop.
Oh, okay. So every time I bring up a new slide, I would need to stop sharing and then re-share again.
No, as long as you're on your desk instead of just.
I'm sorry, Crystal, you're breaking up.
If you just stop screen sharing now and then screen share again, but just choose desktop instead of the presentation, and then you should be able to flip back and forth.
Okay. Okay, it's not giving me an option for desktop. Let me see.
When you
Okay.
click
I'll just continue.
Okay.
Yeah. Okay, so I'll just go ahead and talk about the credits and deductions there. Just know that you can go to irs.gov. That link that is showing here just took you to the irs.gov website and just breaks down several credits that you may be entitled to, or something that you might go, hey, wait a minute, maybe I am entitled to that, and allows you to click onto that specific credit, explains what that credit is, and then might direct you to a worksheet to see if you might be eligible for that. So if you, again, just a good pointer is irs.gov for credits and deductions for individuals. You go into there and that can guide you for that. It has a lot of interactive tax assistant tools that'll help you determine if you're eligible for particular credits or deductions, and for how much that you might be able to get for it, which again, credits and deductions will help decrease any tax that you might owe, and even if they're refundable credits, allow a larger refund for yourself. Okay, so everybody could see my screen again, correct? Okay, I'm going to say yes. Okay, so this slide is information about the impacts, economic impact payments. Okay, they're sometimes taxpayers refer to them as the stimulus payments. And again, a lot of resource on irs.gov regarding them. In 2021, the third economic impact payment / recovery rebate credit. If no economic impact payment was received, or it was not the correct amount, you must now claim it as a recovery rebate credit on your 1040 individual return or your 1040 SR tax return, which is used for seniors. Okay, so the impact payment, the economic impact payment in 2021 was $1,400, $2,800 if filing jointly for 2021, plus $1,400 for each qualifying dependent with a valid Social Security number issued by Social Security Administration before the due date of the return. Let's see if they have examples. It goes a little more into the third economic impact payment. The income Let's see, the income phase out amounts changed. Payments begin to reduce for individuals with adjusted gross income of 75,000 or 150 if married filing joint. The reduced payments ended at AGI of 80,000 for individuals and 160,000 for married filing joint. People with the AGI above these levels will not receive the payment. Payment amounts are different. Most families will get $1,400 per person, including all dependents claimed on their tax return. Typically, this means a single person with no dependents will get $1,400, while married filers with 2 dependents will get $5,600. Okay, and qualifying dependents expanded. Unlike the first 2 payments, the third payment is not restricted to children under 17. For the third payment, the child must be under the age of 19 at the end of the tax year, under the age of 24 at the end of the tax year, a student who is younger than the taxpayer, or any age but permanently and totally disabled. Eligible individuals will get a payment based on all their qualifying dependents claimed on their return, including older relatives like college students, adults with disabilities, parents, and grandparents. Okay, so if you did receive your full economic impact payment during 2021, you should have received a notice, and that notice is the 1444C and showing the amount received. Okay, so you're going to need that because that'll give you an idea as to the amount that you received when it's time to file your return this year. Note, if you misplaced your notice 1444C, you can find the amount of the EIP, which is the economic impact payment you received. You can go to irs.gov and search for get transcripts. Okay, you can review it right online. You can sign up to view your IRS account online also. And that'll give you the information that you're going to need for the amount that you would have received. You don't need to complete any information about the recovery rebate credit on your 2021 Form 1040 if your economic impact payment totaled the full amount which you qualified for. So the stimulus payment or economic impact payments, once that's issued out, you know, it went out to all the taxpayers. Some taxpayers didn't receive it, or they might not have received the correct amount. If you receive the correct amount and you verify that, then you're good. You don't have to adjust it on your tax return. Okay, and when it's adjusted on the tax return now, it's no longer considered an economic impact payment. It's considered now a recovery rebate credit. So that's where that verbiage comes in. If you didn't receive your EIP, but you received that notice saying the payment was issued to you, go to irs.gov. EIP FAQ, that page for instructions on how to trace the payment. You must request the trace immediately, as it takes time for this process to be completed. If it's not completed before filing your tax return, it will delay the processing since the information will not match the IRS records. So the IRS is showing that they did send it to you, however, you didn't get it, right? So you're going to want to claim that on your tax return as a recovery rebate credit. However, in the IRS's records, they're saying, hey, we already gave this to you. So if that's the case, and the IRS is saying they did issue it out, what you're going to want to do when you didn't receive it, go to the irs.gov, the FAQ page, and the instructions will show you how you can initiate a trace on that to see what happens to your EIP. If you didn't receive any payment at all in the calendar year 2021, or the amount was not correct, but you do qualify for it, you must now claim it as a recovery rebate credit on your Form 1040. Okay, and the Form 1040 instructions will show you how to claim that recovery rebate credit. There are no provisions in the law that would require individuals who qualify for the third EIP or for any additional payment based on their 2020 or 2019 information to pay back all or part of the payment if, based on the information reported now on the 2021 tax return, they would have qualified for a lesser amount, which is great because the IRS issued out these EIP payments to everybody based on the information that they had in their system, right? So now when you're coming in filing a year later, some of that information might have been changed. Maybe you have one less dependent that you're claiming. Maybe you were separated during the year, whatever the case might be. The IRS is saying there's no law put into place now where now you have to say, oh, well, now I got too much, I'm going to report it, so I have to pay it back. The IRS at this point, they're indicating that there is no law put into place to recover that. Okay, does anyone have any questions on the EIP?
I don't see anything in the chat.
Okay. Okay, so go ahead and moving on then, we're going to talk about the advanced child tax credit. Again, IRS.gov, lots of information on this. The credit is for qualifying children. It's a fully refundable credit, and it now includes children who turn age 17 in 2021. The American Rescue Plan Act of 2021 increased the amount of child tax credit and made it refundable for tax year 2021 only. It was $3,000 for qualifying children between the ages 6 to 17 years old at the end of 2021, and $3,600 for qualifying children ages 5 and under at the age of 2021. The advanced child tax credit, taxpayers may have received up to 50% of their CTC, which is child tax credit, in advanced monthly payments between July through December of 2021. The increased CTC is phased out for taxpayers with modified just gross incomes over a certain limit, and taxpayers had the option to unenroll if they did not want to receive the advanced payments. The credit is claimed, reconciled on the Form 1040 series for this tax return on Form 8812. So a lot of taxpayers, if they did not opt out, if you opted out in July or any time from July to December, I think actually till November you had to opt out for it, then those credits weren't being issued out. If you were married filing joint, one spouse opted out and the other one did not, they received half of the CTC or advanced CTC that was being issued out. Whatever was issued out for that time frame for the advanced child tax credit, it is an advanced credit. Okay, so that is a credit that now has to be claimed on your tax return that you did already receive it. Okay, normally when you're file your tax return, the child tax credit and additional child tax credit are two credits that go towards reducing the tax or possibly refundable credit going out towards you. But now this is an advance credit that the government issued out, and now we have to report that any taxpayer who will receive that advance credit does report that they received this credit already, and of course now they can't claim it or as much as they may have originally. Okay. So starting January 2022, the IRS will send out letters. The letter is the 6419 to provide the total amount of advanced child tax credit payments that were dispersed to you during 2021. This letter should be kept. It's in regarding your advanced child tax credit payments with your tax records. You will need to refer to this letter when you file your 2021 tax return during the 2022 tax filing season. If you lost this letter, you can see the total amount of these payments on either the Child Tax Credit Update portal or on your online tax account. Both these systems require that you verify your identification. Another alternative is to require a tax account transcript. And again, if you go to irs.gov, facts and questions, it can direct you more to if you need to obtain any of that information as to the amount that you received or how to obtain that amount. Excess tax credit amount. If the amount of your tax credit exceeds the total amount of your advanced child tax credit payments, you can claim the remaining amount of your child tax credit now on your 2021 return, right? Because you're still entitled to a portion of that credit. So of course you can claim that credit. Excess advanced child tax credit payment amount. If you receive the total amount of advanced child tax credit payments that exceeds the amounts of child tax credit that you can properly claim on your 2021, you may need to repay the IRS some or all of that excess payment. For full details about this, you can also go to irs.gov, frequently asked questions and answers, and that'll also provide additional information. So just a reminder, when you are filing your tax return, if you did receive the advanced child tax credits from July through December, that is something that you need to report on your tax return. And like it said, the IRS did issue out letters, or will be starting this month, so you should be receiving one. And if not, refer to irs.gov, and it'll guide you as to what you need to do. The advanced child tax credit. Caution: if the total monthly payment amount reported on your Form 8821 does not match the total shown on the letters that were issued, the 6419, the process of your return will be delayed. Again, it's that verification match. They want to make sure that everything is matching up. So that's why it's very important to know how much based on that 6419 letter, or refer to irs.gov and take a look at the transcripts and get that information, so you bring that right amounts onto your tax return to avoid any kind of delay. Let's just see. It says if you're missing the letter 6419, I think we touched upon this. You can see your federal tax return instructions before entering the amount on the line, or again, go to irs.gov FAQs that'll assist you and guide you. Okay. Does anyone have any questions on the advanced child tax credit? Okay. Okay, so our next credit we're going to talk about is the Earned Income Tax Credit, or EITC requirements. Okay, we'll do a quick refresher on EITC. It's always important to keep these EITC requirements in mind, as a lot of tax return errors do involve EIC. This credit is something that does get kicked out quite often. So it's important that if you are claiming the EIC credit, that you are following all the requirements needed in order to claim that credit, of course. The IRS, I will say, the EIC credit is something the IRS looks at to make sure is being claimed correctly. You'd always check the income limits first. You're going to use the EITC assistant tool. Okay, every year the EIC amounts change, so it is important to always refer to that instead of just kind of looking at past year's return and copying that information over. You must have social security numbers for yourself and your spouse if married filing joint, and all qualifying children before the due date of the return, including any extensions. Filing status: married filing joint, head of household, qualifying widow or widower, single, married filing separate, must meet eligibility requirements under the special rule in the American Rescue Plan Act of 2021, must be a U.S. citizen or resident alien all year, cannot file a Form 2555 or Form 2555-EZ and claim the credit, and meet the rules for those without a qualifying child or have qualifying children. So this slide is really just a reminder to make sure that if you are going to be claiming the Earned Income Tax Credit, to make sure that you are qualified to claim that credit. Like I said, if you're claiming that credit and let's say the social security number of one of the dependents wasn't supplied, that's going to kick out. It's not going to either allow the credit, it'll be a math error on the return and pull it, or it'll be stopped, and then it'll delay the completion of your return or the release of your refund. Okay, so just a note, always refer back to the instructions when it comes to the EIC credits to ensure that you are really entitled to and that you do qualify for that credit. For 2021 EITC information, show proof of earned income, have investment incomes of $10,000 or less, have a valid social security number. You must meet the adjusted gross income for your filing status, and you must be a U.S. citizen or a resident alien all year. Okay, the tools that the IRS has for you to use to determine qualification for EITC is you can use the EITC assistant to see if you even qualify. TAS, Taxpayer Advocate Service, you can go to EITC Get Help page on the Taxpayer Advocate Service homepage. We have a EITC Get Help that'll help guide you also. And of course, irs.gov. It's an excellent source It has worksheets on it. It breaks down very simply as if you would meet those qualifications. Okay, and some common errors we see with the EITC errors is claiming a child who doesn't meet residency or relationship requirements, reporting income or expenses, particularly on a Schedule C, incorrectly, filing as single or head of household when married, name and social security number errors, okay? And again, on the bottom, it's just referring you back to the irs.gov. These are, I could tell you, in the Taxpayer Advocate Service, we work a lot of cases that get kicked out, let's say in the exam department, because the EITC seems questionable. So it'll get pulled into the exam department. And I will tell you, these are the items that are most commonly found when it comes to claiming the earned income tax credits. Okay, so you always want to make sure, again, that you are eligible for that, just to prevent any delay in the processing of your tax return. Okay, some other credits and deductions. If you go to irs.gov, it just outlines a whole bunch of other credits and deductions you may be entitled to. Some you might not even be aware of, but it's a good reference to go to when completing your own tax return to see if you might be eligible for it. You know, some people just might just know off the top of their heads, yep, this one. But if you go to that irs.gov website on the credits and deductions, so credits for other dependents is a tax credit available to taxpayers for each of their qualifying dependents who can't be claimed for the child tax credit. The maximum amount of this credit is $500 for each dependent who meets certain conditions. Okay, and these conditions would be dependents who are 17 years old or older, dependents who have individual taxpayer identification numbers, an ITIN, dependent parents or other qualifying relatives supported by the taxpayer, dependents living with the taxpayer who aren't related to the taxpayer. All right, and this credit begins to phase out when the taxpayer's income is more than $200,000, and the phase out for married couples filing joint is $400,000. Okay, so this is, some people might not be aware of. The child tax credit is up to age 17 at the end of the tax year. However, some people might have older children still living with you. If you have a 20-year-old child living with you who doesn't go to college, goes to work every day, but you're still supporting them, you may be entitled to claim an extra $500 for that person. Okay, so the tax credit available to taxpayers for each of their qualifying dependent who qualify can't be claimed for child tax credit. The maximum credit amount is $500 for each dependent who meets certain conditions, and taxpayers can use the instructions on Form 8812 to determine if they can claim the credit. Okay. Education expenses. You need a Form 1098-T, which is the tuition statement from an eligible educational institution to claim the education expense. This is also a big thing that we see gets kicked out. Let's see, schools have until January 31st to provide this form. Okay, it can be provided by mail or electronically to you. If you don't receive it by mid-February, you should contact that institution to get a copy. Okay, I would definitely recommend to make sure you have a copy of that 1098-T. There's been several cases in the past where the credit was claimed when the tax return preparer completes a return, but the taxpayer never actually attended the school. So double check any and all credits claimed on the return, especially if someone else is preparing it for you and before you sign it. Very important. I know a lot of us a lot of taxpayers bring their returns to preparers to complete, and the preparer just asks questions, up. We go, yes, or just answer. They're filling out the return, and then we go ahead and we sign it. It is very important to make sure what they're putting on that tax return is accurate, because even though they're completing it, you are signing that you are saying that this is a true return. So it actually, you know, it's the taxpayer's responsibility to make sure that the information on that return is correct. Okay, so the next thing we'll talk about is charitable contribution deductions. Okay, these are non-itemizers. $300 for cash contributions made to qualified charities during 2021. The maximum deduction is increased to $600 for married individuals filing joint returns. Itemizers. Limits typically range from 20% to 60% of adjusted gross income, AGI, and vary by the type of contribution and type of charitable organization. For calendar year 2021, qualified contributors, taxpayers can apply up to 100% of their AGI. Okay, so new this year is a charitable contribution deduction for individuals who don't itemize for cash, for cash donations up to $600. Ordinarily, individuals who elect to take the standard deduction can't claim the deduction for their charitable contributions, right? Because that's usually claimed on a Schedule A. The law now permits these individuals to claim limited deductions on their 2021 federal income tax return for cash contributions made to certain qualifying charitable organizations. Nearly 9 to 10 taxpayers now take the standard deduction and could potentially qualify to claim this deduction for the cash contribution. So for 2021, individuals, including married individuals filing separate, can claim this deduction up to $300 for cash contributions made to qualified charities during 2021. The maximum deduction is increased to $600 for married filing joint returns. Okay, there's also a 100% limit on eligible cash contributions in 2021. The subject is subject to certain limits. The individuals who itemize may generally claim a deduction for charitable contributions made to qualifying charitable organizations. These limits typically range from 20% to 60% of the AGI and vary by the type of contributions and type of charitable organization. For example, a cash contribution made by an individual to qualifying public charity is generally limited to 60% of the individual's adjusted gross income. Excess contributions may be carried forward for up to then 5 years. The law now permits these individuals to apply at the increased individual limit, up to 100% of their AGI, adjusted gross income, for qualified contributions made during the calendar year 2021. Okay, so that's a pretty big change. In the past, it was limited to only 60%, but now they've increased it to 100%, where in the past, the 60%, that difference, they'd have to carry it forward. They've now made it that they can claim the full 100%. So that's a pretty good change too. The IRS reminds individuals and businesses that special record keeping rules apply to any taxpayer claiming a charitable contribution deduction. Usually this includes obtaining an acknowledgement letter from that charity before filing the return and returning a canceled check or show of credit card receipt that the contribution, if the contribution was for cash. For donations of property, additional record keeping rules apply and may include filing a Form 8283 to get the qualified appraisals in some instances. So that little check mark there just is reminding you, if you are going to go ahead and claim that charitable contributions, just make sure you have your records, your receipts to show that, you know, you are of course entitled to claim that. Okay, let's see what else. The premium tax credit. This is in Form 8962, the premium tax credit, and it must be submitted if the premium tax credit is being claimed. Okay, the use of Form 1095A, which is the health insurance marketplace statement, is needed and should be submitted actually to complete the Form 8962. Tax returns may be delayed during the processing of this credit if the credit is being claimed, but that 8962 is not attached. I will tell you that is a big thing for delays in the IRS, at least in last year's processing. If you are claiming the premium tax credit because you received you were entitled to extra credits based on the health care, and you didn't include that 8962, it gets pulled right out of processing. Okay, and then it gets held in processing until somebody can actually go in, send a letter out to the taxpayers, let them know exactly what's needed. It is a very long delay for taxpayers. It just reference for more information. You could go to premium tax credit, the basics, healthcare premium, tax credit, Form 8962 instructions, and publication 974. Again, everything can be located on irs.gov. For the 2021, the law now allows for expanded eligibility for the premium tax credit by eliminating the phase out for households with annual incomes above 400% of the federal poverty line. Taxpayers who received unemployment compensation or who were approved to receive unemployment compensation for any weeks in 2021 are now generally eligible to claim the credit. Okay, and again, the marketplace will send out that form 1095A generally by January 31st of the following year. So it should be going out the end of January this year and be mailed out to the taxpayers. That is the documentation you should have attached and you need to use when completing a Form 8962. Okay, does anyone have any questions on anything that I've talked about so far?
There's nothing in the chat, but feel free.
How do we get the copy of the slides? It's a good presentation, by the way.
Oh, thank you. Crystal, I had sent, Crystal, do you guys handle that on your end or something at the library?
I'd be happy to share that.
Oh, I'm sorry, Crystal, you were breaking up. Yeah, you're still breaking up, Crystal. Can you put it in the chat? Maybe they can see in the chat if you're able to share it or not share it. Okay, so anybody interested can just refer to the chat. Unfortunately, Crystal is breaking up a little bit right now. Okay, so we will go on, attach all required forms and schedules before you submit return. So important. What happens is if you're claiming, I'm going to go to the EITC again, that is a big thing, or that 8962 form we were just discussing. If you are claiming the credit and the required form, not just credits, any kind of form that is required to be attached to the return, but I'm just utilizing the EITC. If you're claiming that credit and you don't apply the correct form with it, the scheduled EIC, that'll get pulled right in processing and it'll prevent your tax return from being processed. If the W-2s are not attached, that'll prevent your return from being processing. It is very, very important. On everything you're reporting on the return that has a documentation that you should attach to your tax return, just to ensure that your return goes through processing smoothly. Let's say any documentation that shows federal income tax should be returned. So anything federal income tax withheld must be attached to your tax return. Again, that's part of the verification. Not only the federal withholding reported on W-2s, it is also reported if you received unemployment income, maybe even some pensions. So anywhere where you see federal income, that is a big thing because that's a refundable credit that possibly can be included in that refund amount. The IRS will always be verifying your federal income withheld. Always want to make sure everything is attached. Finding a tax return preparer help. Here's a resource help, free help. We have VitaSites and TCE, what to bring, VitaSites and Locator. Tax professionals, there's a directory of federal tax return preparers with credentials and select qualifications, or TAS Get Help page. Again, TAS is Taxpayer Advocate Service. We have a Get Help page for filing returns and choosing a tax return preparer. The reason why we wanted to put this slide in here is because it is very important if you do go to a preparer to have your return completed. You want to make sure that person is qualified, number one, and is filing an accurate return for you. You don't want it held up in the IRS system because it gets hit out in a filter because something looks a little off. And you want to ensure that of course preparer is doing the best job they can for you. So these are just some sites, again, irs.gov, or you can go to our page, the Taxpayer Advocate service, which will help you guide you through or give you some links to maybe help out. There is free help. I know some people can't afford to go to tax preparers. They're not exactly inexpensive. So you can get free help though if you meet a certain income qualification from trained volunteers. The IRS has a program, it's called the VITA, which is IRS Volunteer Income Tax Assistance, and the Tax Counseling for the Elderly, which is TCE programs. And both of them offer free tax help for taxpayers who qualify. When filing season starts kicking off, and maybe not last year because of COVID, and I'm not sure going forward into this year, but generally VITA and TCE are out there at local libraries or in local communities. They advertise for VITA sites for people to go, and if you meet their income qualifications, they will help prepare your tax return for you. So if you're interested in that, that information would also be on irs.gov or the TAS website. Okay, e-file it. Be aware of tax software that imports prior year data automatically. Use direct deposit or direct pay. Okay, so we recommend electronic filing returns. Okay, it is faster, it's more accurate, it's secure. You get that confirmation that it was sent, the IRS received it. So you have that knowledge that it was sent out, as opposed to you putting it in the envelope, sending it to the IRS and just waiting it to be processed. Not only is it more accurate and you get that confirmation that the IRS received it or the state received it, you also have quicker processing time. Okay, so an electronic filed return generally takes, well, I'm going to say 21 days. At the beginning of season, it's not as long, but they say about 21 days to process a tax return. So probably within 2 to 2.5 weeks, you could possibly be receiving your refund, as long as there's no errors on the return, it doesn't get pulled for processing, as opposed to a return that you mail directly in. Generally, a mailed-in tax return could take, the time frame was 4 to 6 weeks, but I will tell you right now, the IRS is still processing returns from about a year and a half ago. So the processing time frames is a bit longer if you're going to mail that tax return in. My tip I would like to say is if you do have a value tax return that you are mailing in, you should always, my suggestion, of course, is to always have a certified copy as proof that you mailed in the balance due return, because balance due tax returns get subject to penalties and interest if the payment is not made timely. The IRS might not process it timely, but if you have that certified receipt to show you mailed it prior or on April 15th date, then you are covering yourself. Just a little tip. There are many choices when it comes to using personal tax return software programs like TurboTax, TaxAct, HR, Block Online, TaxSlayer.com, or any other similar products. If you don't qualify for free tax help, or you just want to complete your tax return on your own, most will walk you step by step through completing the forms with questions that can be done on your personal computer, and even some can be done on your mobile phones. One caution we say is when using this type of software program, if you're using the same software program you used last year, you're going to want to check that the current information is present. That what happens is, and anyone not familiar with using, I'm going to use TurboTax, for example. If you're using TurboTax, it will sometimes it'll populate all that same answers, same information from the prior year. It does ask you, has anything changed, or are you still working for so-and-so, and you say yes or whatever, and it should self-populate that. But you always want to, if it's self-populating and you're bringing that information over, you always want to double check before you hit that submit button that that information they brought over is correct. So just a little tidbit. And they have an example here. In 2019, you reported wages from your W-2 of $25,000, and now in 2020, you had a W-2 of $30,000 from the same employer. You input your current W-2 wage information, and your prior year data rolls over for an additional $25,000 in wages. Now this, of course, there's your verification. It's not going to match up. This would delay the processing of your refund if you were entitled to it. Definitely would. It would be a filter that would kick out in the IRS's system. So just a quick note, just make sure all of the information is correct before you hit send. Direct deposit. This is a big thing we also see. So direct deposit is great. You get your refund so much quicker. The only thing we definitely would definitely say is please double, triple, quadruple check your routing and account numbers, that the information you are providing is correct. Like I will repeat mine like 4 or 5 times and keep looking back and forth just to make sure. Because if you transpose a number, you put an incorrect number, that is the number you're telling you are signing that return, remember, and you're submitting it electronically, confirming that all this information is accurate. So that incorrect number on there, you are certifying that that is correct. And the IRS will direct deposit it into that account. If that bank account it goes to does not catch it and kick it back to the IRS, which happens often, then it's really considered a civil matter because you told the IRS directly deposited where you told them to put it, right? So now that leaves the taxpayer responsible now for trying to get that refund from the bank. Any tax information, I'm down on the bottom where it says direct deposit, any of the tax information, tax return filing options we just spoke about, including paper tax return, all allow you to choose to have your refund directly deposited. It's free to you, saves the government money, and it's the fastest way for you to get your money. You can even split your refund into 1, 2, or 3 financial accounts and buy savings bonds also. Just go to irs.gov and research the word direct deposit. That'll give you additional information if you choose to split them, or if you choose to use the savings bonds option. Those without bank accounts can learn how to open an account with FDIC insured bank or through National Credit Union Locator tool. And veterans should see the Veterans Benefit Banking Program for access for financial services to also participate in this process. So there is even options for taxpayers who don't have an account that may be able to get direct deposit if they were to refer to these. Direct pay. Also be aware that the IRS provides several different ways to pay should you owe a tax balance. One of them is called direct pay, and there's the website, www.irs.gov/payments/direct-pay. Use the secure service to pay your taxes, Form 1040 series, estimated taxes, or any other associated forms directly with your checking or savings account at no cost to you. And all payment options can be found on irs.gov pay menu button. So that's just alerting you if you do file your return, you prepare your return, you see that you might have a bill due that's owed, you have an option instead of sending that check in, you can go right online. Again, you could sign up for this process and you could, it's no charge to send the payment directly to the IRS that way. You will then also have confirmation that they received that on the date that you sent it or when they're showing it went through. If you do choose, this is again, just something I'll throw out there. If you do choose to mail in a check, if you do have a bill due, I would strongly suggest, again, you should have that as certified as proof that you mailed a check to the IRS. Just to show that it was done timely, just keeping in mind any bill due returns are subject to interest and penalties. So if you do mail that check in on April 15th, but let's say, I don't know, the IRS might have misplaced it, and it doesn't get cashed until September, and for some reason that's the date they use, it's good that you have that in your records to go, well, wait a minute, I shouldn't be assessed that penalty because here's my proof. Again, just a little tip. Language and accessibility information. Need instructions or notices in your language, need an interpreter help, or need other IRS or TAS communications in a different format. So we have instructions, need instructions or notices in your language, you need an interpreter. That is available. We have many people who speak different languages. We have forms, instruction booklets, also in different languages, that if you request it, we can have that sent to you. Multibilingual resources. We know that tax information could be hard to understand in any language. It can even be hard if the information isn't offered in the language that you know best. The IRS is now translating tax resources into more languages. Currently at irs.gov offers basic tax information in English plus 20 other languages. So if English is not your first language, and you know, it's easier to follow instructions in your own home language, then go to that irs.gov and see if the IRS, they have 20 other languages outside of English, to see if there's your language is listed there. And then maybe they have forms and instructions in there that may be easier for taxpayers to file. Okay, and in there you'll see IRS tax forms, our publications. Publications are step-by-step guides on specific topics, social media channels in multiple different languages, different kinds of schedules that needs to be attached to the tax return. So definitely a good resource for you to check out if you need to. Requesting a language preference. You can request to receive certain IRS information in the language you prefer by filing Schedulelep, which is a request for change in language preference with your individual tax return. Okay, again, it references you to irs.gov, and it says the IRS has a form 1040 Schedulelep, which allows taxpayers to ask for information from the IRS in their preferred language. Again, just reiterates that there's 20 different languages besides English that they would be able to assist with. Just saying, you can complete the form and file it with your individual tax return. The forms are available in English and Spanish on the IRS Forms and Publication website. And if you e-file a Schedulelep with your tax return, you don't need to file a paper version also. So once you file and e-file the return, you can e-file the Schedulelep along with your tax return. You don't have to then mail it in either. That's just duplicate work for yourselves and for the IRS. So again, if you do prefer information in your preferred language, definitely go to irs.gov. Again, if you're unable to find it, click it in the search and more information will come up and guide you. We have interpreter services. Over the phone interpreter services are available if you need. For assistance in English and Spanish, this is a number you can call. It's 800-829-1040. And if you need assistance in other languages, you can call 833-553-9895. Okay, and if you can't find the answer to your tax questions in your language on irs.gov, the IRS does offer more than 350 languages with the support of professional interpreters. And I could tell you, I've actually used this interpreter line. It is very good. And they have 350 languages, but when you have, you know, if you need assistance interpreting something, it's excellent to go to. And just something so you know that they're there for you if you need them. Accessible IRS tax products. Available options for obtaining accessible tax products. If you need a tax product in an alternative format, you can download it from Accessible Forms and Publication page on, again, irs.gov, or request paper copies in Braille or large prints by calling the tax form telephone number at 800-TAX-FORM, which is 800-829-3666, 876. Okay, and they'll make sure that they get those copies of Braille or the large print out to you or a taxpayer if they need it. You can request tax notices and letters in Braille or in large print. If you receive a notice or a letter but would prefer to have it in Braille or large print, you can have the following choices. Beginning January 2022, use Form 9000 Alternative Media Preference. Attach the form to your tax return or mail it separately to the IRS. Or you can call for tax assistance telephone number at 800-829-1040 and just explain that you would like the information in Braille or large print, the letters reissued out, or the IRS notices reissued out. Okay, let's see. We're up to IRS Alternative Media Center. Call accessible helpline at 833-690-0598 with questions on IRS accessibility services. And they're here to answer questions related to current and future accessibility products and services available to alternative media formats, such as Braille, large print, audio, to the taxpayers with disabilities, right? So there are taxpayers, of course, out there that might need additional assistance. You know, IRS just sends out their general letters. However, you might need it in Braille, or you might need it in large print, or if you're listening, you might need it verbally. If you're blind, maybe you want it verbally written, read to you. So the IRS has this helpline to assist with that. Okay, so we're going to stop here for now to answer any questions you might have. Does anyone have any questions on what I might have addressed previously during the presentation?
I put, this is John. I put something in the chat box a while ago. I don't know if it was overlooked or you never saw it. But the question is, I have 3 people in my household, my wife, myself, and my daughter, who's 49 years old, who does not work because of disability, and I contribute to 90% of her welfare, and I deduct her every year. This year we got, I believe, was a $4,200, what do you call it? You called it a third economic income payment. And one thing, unless I missed it, do I have to pay taxes on that?
No, you don't pay taxes on the stimulus payments that were out. What you do though is you would check to make sure that's the correct amount that you should have received. If you are entitled to more, then that's called now a recovery rebate credit, which is what you would be reporting on this year's, on the return for 2020.
So that
but it's not taxable.
Okay, the whole presentation was to make sure that it's accurate.
Yes, that portion of the presentation was just to let taxpayers know that these economic impact payments were issued out. If now that information is based on information the IRS has based on your past filing. So if now coming into this year, that filing is different, you might be entitled to more of that. So you would claim that additional credit on your return when you file, and it's considered a recovery rebate credit. If the information changed and you might have gotten more, there is no law set into place saying that you have to pay any of that back.
So I go to a professional tax preparer, they would be able to determine that?
Yes, they definitely should be.
Okay. I have one other question, if you don't mind.
No, of course.
In July of this year, I did an amended 219 tax return. They still haven't gotten it. And when I go online to check, not gotten it, but gotten to it. And every time, I call, they tell me to call the number. And I call the number about every 2 months, and they tell me they don't have the staff to address it. And so This is now again, we're January of 2022, and they haven't even looked at my amended 219
Yes.
form. Is that normal?
Oh, yes, that is absolutely normal. As of October, I haven't looked at their website recently, but I can tell you as of October, I did a presentation at the end of December, and as of October, I believe they were 2.7 million returns, processing amended returns behind. So if you filed an amended return, their normal time frame is 16 to 20 weeks. That's a normal, without COVID, without short staffing delay. However, because of their short staffing, and they are very short staffed, that delays the processing even more. So when your return goes into the IRS, it goes into the processing center of it, right? So if they don't have enough manpower in there just to even stamp it that it's IRS received, that, okay, this looks good, we can send it off to the floor for them to start making the adjustments and make those changes based on that amended return. They don't have the staffing for that. It's just sitting, waiting in turn for someone to get to it to move it forward. So yeah, what you're being told is actually what is very much happening, unfortunately.
They said it's a different group that is handling the amended as opposed to the real-time tax returns.
Yeah, so like a normal tax return really just hits, goes through IRS's processing, and in processing itself, it just hits all the filters, like, is your name information right? Your social security number right? Is everything verified? All the income and withholding verified? All the forms attached? That's normal processing. When an amended return goes into the IRS, it still starts in that one mailroom, the processing mailroom. However, an individual actually opens up that amended return and says, okay, this is a Form 1040X amended return. We're going to put this over here to be transferred down to the adjustment department, because the adjustment department are the ones that actually adjust the accounts.
Thank you very much.
You're welcome. Does anybody else have any other questions?
I had thrown a question in there. One of our staff members has a daughter who works for, she has a business and she sells on Etsy. And she, according to them, she didn't make enough money to get a 1099K form from them.
Okay.
But she's wondering how she proves the income that she made. She said it was like over $7,000. So I was surprised.
So what she would do, I'm sure she must have kind of receipts, or she must have kept records, I'm sure, as proof of any kind of income she would have received. In order for her, they might not have issued her that 1099K. However, since she did reach out to them and they're saying, no, we're not sending it, what I would suggest, definitely have it reportable, especially if she has other income and this is just part of her income she needs to report. What she's going to want to do is then just keep a record or breakdown of how much she received. And I myself would have that also attached to the tax return as my own kind of log to show as proof. I mean, I'm sure if she had to cash checks or if she had money go into a bank account, something like that would show an audit trail of money that came in that she's reporting.
Okay, thank you. And she can also write off any fees that she's required to pay on Etsy if she like itemizes.
Yeah, if she chooses, well, generally someone who, let's say, works off of or sells on Etsy or is kind of considered a self-employed taxpayer. So she could be using a Schedule C where she reports her income and then deducts any expenses that she would have had to put towards her supplies or any charges or fees that Etsy would have charged or shipping costs. All of that she could put on our Schedule C.
Okay, thank you. I'll let her know.
Okay, yeah, no problem.
We've got time for one more question, if anybody has any. No?
Okay, and I'm just going to show some real quick slides. Really, this is just for some self-help. Again, I could just reiterate probably 1,000 times to you guys. IRS.gov is excellent, or there is our website for free help for everyone. It's the Taxpayer Advocate.irs.gov. You could do /KenTaz help me, or you could just go onto our website and search around. And again, I keep saying IRS.gov, but it really is an excellent source for taxpayers, even people at the IRS. Like sometimes I will be going to irs.gov when I'm doing my research for my taxpayers when their cases come in, just to see, make sure those guidelines are where they're supposed to be and to help me out. It is an excellent source. So I definitely just keep reiterating irs.gov, or please, you can go to taxpayeradvocate.irs.gov, and there'll be some additional help for you guys there. Okay, and there's just a couple of different websites if you want to just jot some down. Our NTA blog is our National Taxpayer Advocate. Her name is Erin Collins. She's in Washington. The Taxpayer Advocate Service, we are independent of the IRS. We report directly through Congress, and Erin Collins, who is our National Taxpayer Advocate, she is the one who reports to Congress any trends that we see that can help the taxpayer, or delays, such as what that gentleman was talking about, a delay in processing amended returns. Those are things that we pick up in the Taxpayer Advocate, and we elevate to Congress that this is a problem for our taxpayers and we need this resolved. So again, here are some additional media sites and news pages if you want any additional information. And we're, like I said, we're here to help you. So anything we can do. Okay.
Thank you so much, Christina. It was really informative. Sorry about the technical difficulties.
Oh, no, no. Hey, I had a ton of before the class. So I'm glad we were able to get the PowerPoint up. It was a pleasure speaking with everybody this evening. And if nobody has any questions, I'll go ahead and say goodnight. And thank you very much for your time.
Okay. Thank you so much, everyone. Be safe.
Take care, everyone. Be safe. Bye-bye.
Thank you. Bye-bye.